Is Q4 time for a rebound? Let's bring in Mizuho's Dan Dolev, who calls the firm and SoFi buys, has a hold on Block. Dan, great to see you again. I want to get you first on SoFi because the squeeze between crypto worries and student debt has been like a pincher move on that stock.
Yeah, I mean, it's like, as we said in the note, the first cut is the deepest. This one is not so bad. This one has been, people love to hate this name. But if you actually look at the fundamentals, they're great, right? I mean, they're making personal loans like a bank. The student loans, I mean, I guess we had that setback with the Biden extension of the moratorium. But you're seeing the stock really barely move to that because I think it's kind of immune to that. So I think from here on, there's only pure upside because, all the bad news are priced in. They're doing well fundamentally. And it's a bank with a cachet, and you don't really have any other equivalent to that here in the U.S.
Walk me through the hold on Block, some of the dynamics that lead you to that.
Yeah, I'm not a big fan right now of, this used to be our top pick for a long, long time. It kind of grew on us that I think that it's not very well managed. And I think the issue with Block, if you think about the Cash App, which is kind of the growth driver, increasingly payday lending, which they call borrow, is becoming a much bigger part of the Cash App growth. We estimate that this was probably 50% of the incremental growth in the third quarter. Up to 50% came from payday lending, maybe a little bit less than that. This is not a great business, especially not in this environment, especially not given the cohort of people that use a lot of people that don't make a lot of money are using the Cash App. And, the question is, will they actually pay back? Everyone's going to take a payday loan. The question is how many people are going to, pay it back. And that's why we're a little bit more, I would say, lukewarm on Square or Block at this point.
And what's going on with buy now, pay later? What's happening with that phenomenon? Was that more of a blip? Is this going to be a permanent part of this ecosystem? And which companies are best positioned when it comes to that category?
Yeah, and that's the question. That's a great question. Look, if this category survives, I think it will, right? I mean, this is kind of the question. There's no doubt in my mind that Affirm is the market leader, right? You've got some other great players like Zip, which is out of Australia. Afterpay, I think, which is owned by Square, I think that's a little bit of a disappointment, but it's all helping Affirm, right? So Affirm is the market leader. If you look at their securitizations, which is kind of how we track delinquencies, they're actually trending fine. So you're not seeing like a huge, jump in delinquencies, which is what everyone's looking for. So again, if interest rates go through the roof and things get really sour, it might not be a great environment for this. But if they survive, this is the market leader. This is the Visa and MasterCard of buy now, pay later. And that's why we like Affirm.
And then just another question about FTX. I know Carl mentioned it, but looking at the shift in market share over to Coinbase, do you think that Coinbase is well positioned now? And also, if you look more broadly, is this a moment where you think consumers are going to just be shifting out of cryptocurrency? How important is crypto going to be a year from now?
Yeah, I mean, what you just said, I cannot agree with you more than that. I think crypto's dead. And I think that investing in Coinbase is just a waste of time because what's going to happen is consumer is disinterested. If you go back to the .com bubble, it took people like 5 years to come back to these stocks, like the pets.com of the world. And those were real businesses. What we're talking about here is just kind of, these crypto tokens, which are essentially what FTX taught you is that one day you could be worth the world and the second day you could be worth nothing. And I think consumers are going to be very, very scared. So those market share gains, which actually they're very minimal in the greater scheme of things. I wouldn't get overexcited about them because the overall volumes are coming down. They're making like $600 million in revenue and $1.2 billion in losses. It's a very bad business right now.